Welcome back, everyone, to the day two of the Canadian Fixed Income Conference. This session is devoted to discussing ways in which Canada is working towards moving to a more sustainable and cleaner economy. We're going to hear about developments from governments, industry leaders, and issuers who work to meet the growing demand that we know is coming from investors as well as the public for new investment projects that will include ESG considerations. We're going to get started with a discussion on transitioning Canadian energy, a rather big topic led by my colleague, Lynn Doan.
Hello, and welcome to our panel on transitioning Canadian energy. I am your moderator, Lynn Duan. I'm the managing editor of Bloomberg's energy and commodities coverage across the Americas. I am joined here by Max Chan, Vice President of Treasury and Enterprise Risk at Enbridge Inc., a very well-recognized company in the space of energy transition, transportation, and distribution, and Alan Granch, Chief Operating Officer of the Calgary-based energy services company Secure Energy Services. As the name of the panel implies, we're here to discuss what has really proven to be a worldwide energy transition and how the Canadian energy industry fits into that, as well as how to finance it. So with that in mind, let's start with a very broad question for you, Alan. The energy transition can mean a lot of different things to a lot of different people. Tell us, what has it meant for your company and your clients? What are you and they doing to respond and to take advantage of the pressure to transition?
Well, thanks for having me today. Maybe I'll start off by just explaining what Secure Energy does as a company. We have two major business segments. We have a midstream infrastructure segment where we treat, recover, dispose, and transport a lot of production water and oil for our producers. And we have an environmental solutions business where we manage a lot of byproducts of oil and gas through recycling, to remediation, to reclamation, and decommissioning. Effectively, we're managing a large part of the environmental liability and any impacts to the environment. And I would say when we think about Canadian energy companies, I would consider us world leaders when it comes to environmental stewardship. You know, we have the skills, we have the expertise, and we have a regulatory environment here where we're all very well aware of what needs to be done as we move forward in the transition phase. And I would say our focus is around Scope 1 GHG emissions that are directly incurred by the business, Scope 2 emissions that are indirectly, this is electricity that you would use for your processing operations and heat, and Scope 3, other indirect emissions such as transportation costs. And I would say today, Canadian companies are investing capital to reduce and improve how they look at their emissions. I'll look at Secure, for example, on our electricity, our power consumption. We have a number of facilities across Western Canada. You know, we spent a lot of time on our energy consumption and looked at when we were using peak power at these plants, and we determined that we could reduce our facility usage by 30% in terms of power by just moving it to processing our operations at midnight versus doing it during the day. And when I think about our customers, they're also investing in whether or not they want to reduce their power consumption, but also look at things in terms of like carbon capture and how they can reduce their overall GHG emissions.
Thank you, Alan. And Max, let's bring this over to you. You were the kind of company that Secure services. What type of technologies does Enbridge see as most promising in bringing down the Canadian energy sector's emissions?
Yeah, thanks, Lynn. So there's a number of technologies that Enbridge is pursuing. Some might surprise people a lot longer than others. So we've actually been investing in renewable energy for 20 years now. We have solar, wind across North America and throughout Europe. And it's a portfolio that's almost $10 billion these days. So renewables has probably been the longest standing part of the Enbridge asset base in terms of energy transition technologies. However, more recently, a lot more conversation and investment around things like renewable natural gas, hydrogen, and carbon capture, as Alan mentioned. So a lot of exciting opportunities there. And we're piloting a number of these within parts of our business today.
You know, another question for you in terms of financing these technologies. How how does Enbridge and the rest of the Canadian energy industry find the money to bring about the transition that investors are asking for? What is the role of capital markets in this?
Yeah, good question. Good timing, Lynn. So I guess the primary source of cash flow for Enbridge is still from our existing asset base. So the business that's there today, part of the proceeds and cash flow that's generated is to fund new technology and a number of these new initiatives. But timing-wise, as I mentioned, good timing. We issued the first sustainability-linked bond from our sector in Canada just a week ago. And so we're starting to see the emergence of sustainable finance as truly a large and significant asset class. We issued the first sustainability-linked bond for our sector back in June into the U.S. debt capital markets and like I said, last week into Canada. So I think what it's shown is that investors have amassed and formed a lot of capital around this, want to deploy it, want to be part of the solution. So I think the capital markets are clearly gravitating towards helping finance these types of solutions for companies that are responsible and leading edge on this.
All right. And, I'm speaking to two Canadian energy companies today because this is the Canadian Fixed Income Conference, but I am interested in knowing why Canada has a unique, special role to play in the global energy transition. Ellen, do you want to take that question first? What position is Canadian's energy industry in order to help bring about a global change?
Well, I think, when we think about global change and you think about all the environmental and regulatory standards we have in Canada, Canada is one of the most highly regulated jurisdictions when it comes to oil and gas production. We've been doing it for a number of years. And when we think about the regulatory environment here, we're stewards of it. We take pride in production of oil. We've refined our process year after year. And wanted to show improvements in terms of how we go about, extracting oil and gas. We've moved to pad drilling where we're doing these deep horizontals. We're recycling water. We're reducing our flares that you're seeing at some of these production facilities. And one area we're working specifically with our customers on reducing GHG emissions is on pipelines. And we're looking at water pipelines, production water pipelines, and oil pipelines, because we want to take trucks off the road. These diesel trucks create a lot of emissions today, and our producers know that if they put volumes on a pipe, it's the most efficient way to transport oil and water. Our East Kaybob oil gathering line that's now a year and a half into operation, we move 12,000 truckloads annually off the road and save nearly 15,000 tons of CO2 equivalents. So ultimately, we have the expertise and the means to be able to reduce emissions. And if you think about how oil is so significant in terms of the amount of energy we use on a daily basis, the last economical barrel of oil, because we're so environmentally responsible, should come out of Canada.
Ellen, you brought up some interesting points about how well positioned Canada's energy industry is in taking advantage of this transition. That said, I've got to say that the first thing that many think about when they think Canada and energy is carbon intensive oil sands. This is a sector that some companies have decided to pull out of and some investors have decided to divest from altogether. Max, tell me why the divestment movement poses a challenge for the industry in transitioning.
Yeah, I think the issue with transition, it takes a lot of capital. I think we all acknowledge it takes time, but it takes significant investment and significant capital. And quite often, it's the companies that are closest to the ground, so to speak, are the ones who are leading edge in terms of developing that technology. I've talked about things Enbridge is doing, but a number of our customers, particularly in the oil sands, are also leading edge on reducing emissions in their own operations. There's a lot of conversation and investment now forming around carbon capture. And so in many ways, if you consider divestment of the sector just broadly, you're now both limiting the amount of capital and also increasing that cost of that capital to companies that are investing in energy transition technologies. And I think that's actually counterproductive to what we're trying to accomplish. So I think just a broad-based divestment position is probably a bit misguided. I don't think it's the most constructive for, I think what ultimately people are trying to get to is encouraging and fostering more innovative and cleaner technologies. So definitely think there's better ways to do it.
All right. So divestment isn't the answer, is what you're telling me, Max. If investors and people who are looking to finance the energy transition in Canada are going to actually put money toward it and help bring it about, what are the metrics for them to use? What would both of you recommend by way of measuring companies and deciding which ones to back based on an energy transition strategy? Alan, why don't we start with you, and then same question to Max.
Yeah, great question. And, it's an area that it's very challenging to answer because we've got multiple frameworks that are out there today that exist. We have SASB, the Sustainability Accounting Standards Board. We have GRI, the Global Reporting Initiative. You've got the Task Force on Climate-Related Financial Disclosures. And when you look at all these frameworks, we have a lot of reporting agencies picking different applications of these frameworks and reporting on it. And there's really no consistency, no comparability. And I think what we need to do as an industry is we need to adopt a framework that we all adhere to, that we apply the same standards, the same measurements, so that you can look across a sector and understand which ones are ultimately doing the best job. And that's going to take a bit of time. I think we've moved substantially in the last few years to at least have these frameworks and have the ability to report on it. But we need audited frameworks, and we need consistency applied so that you can actually take and measure how you want to put your capital to work. And I think that will come. It just will take a bit of time.
And Max, what about you? How would you respond to investors?
Well, a couple thoughts there. Alan's exactly right. There is so many different frameworks, so many different groups that are trying to score and provide ratings on companies' ESG performances. One to mention in there as well is you've got the credit rating agencies starting to provide ratings as well. So yet another group. So I think Alan is right. There probably needs to be a bit of a consolidation and a bit of standardization there, which is probably just a function of maturity as this continues to evolve. But in terms of your original question for KPIs and what matters, I can definitely talk to that because we have issued now 3 financings that have sustainability-linked KPIs to them. So we issued a sustainability-linked loan earlier this year, and now, as I mentioned earlier, 2 sustainability-linked bonds, one in Canada, one in the U.S. So ideally, we want to measure all facets of E, S, and G. So we have an E KPI in terms of reducing our emissions by 2030. Enbridge has announced a net zero 2050 goal. We have an S component as well in there around employee diversity. And then we also have a G component as well for our board gender diversity. So we think it's appropriate to have a full balance of that. I know the E part of the equation dominates the conversation most of the time, which is important and obvious. But we want to make sure that the S and G components also get appropriate weighting because it is an important component of responsible energy companies that I think sometimes gets overlooked in just purely an E discussion. So a number of the KPIs are set for us already out there, and we've gone as far now as to put significant money where our mouth is in terms of putting those targets out there and have direct implications to our financings.
Well, that's good guidance. Thanks so much for both of you answering that question. Helpful to the investors out there looking for investments in the energy transition space. I have to ask it because this is all we can talk about, and this is all we've been talking about for the past couple of weeks, are these energy crises that we're seeing in regions including Europe today, but also California in the midst of heat waves earlier this year, and the Texas energy crisis back in February, March. Alan, what does that tell us about the energy transition?
Oh, great question. And I think there's several good learnings here we can take away from these regions. And, when you think about a good energy supply, it needs to be reliable, but it also needs to be provided at a reasonable cost. And I think, when you look at California, they've been trying to conserve power. They've been faced with rolling blackouts for a number of years to manage their peak demand. You look at Texas in February of this year, they suffered a major power crisis due to cold weather where, they had frozen turbines, their solar panels were not providing the energy that they needed. They had equipment that froze. So you had people who had shortage of water, you had shortages of food and heat. These are major crises. And then just recently here in the month of September, in the United Kingdom, where the wind just didn't blow for a few days, you had consumers facing surging electricity bills. I believe, they doubled in the month of September for the UK residents, and I think they're 7 times higher than they were a year ago. So these are substantially, factors when you're considering moving towards renewable energy. I think you got to look at it whether or not it's a reasonable cost for the long term for the consumer, because they are heavily subsidized by governments, but they also need to be reliable. I mean, when you see jurisdictions like the UK firing up coal plants to be able to meet their peak demand, it showcases we can't move too quick, too fast, and we have to be very methodical about how we approach energy because it does have to be reliable.
Now, you mentioned wind and its role in the Europe energy crisis, and I must also note that the other resource, of course, that played a major role is natural gas and the lack of supply at the moment in that region. Max, I'll pose this question to you. What role does a national government, in your case, Canada's government, play in both ensuring that there is enough energy resource around to keep the lights on, but also ensuring that an energy transition is actually brought about? What does the government do?
So I think, starting at a very high level, the way we think about energy transition, it's not a binary outcome. I think quite often the conversation ends up as a binary. You're either for fossil fuels or against fossil fuels, whereas the way we think about energy transition, which I think how governments need to think about as well, is it's a portfolio, and it's a shifting portfolio over time. So as time goes on, the portfolio mix of energy sources changes from less fossil fuels to more renewables, more cleaner options, but it's not or. It's not this binary outcome. So I think governments need to understand that it's a portfolio mix and supporting all of those options. As Alan described, there's scenarios around the world playing out real time here as to what happens when you try to cut off, low-cost, proven, reliable sources without proven, reliable, and cost-effective alternatives. You do set yourselves up for these crises, and these are real consequences. These are not luxuries here. These are the basic necessities of life in a lot of these places, to be able to heat your home, be able to turn on electricity, et cetera. So I think for governments, it's understanding that it is a portfolio mix. It's not these binary, often politicized situations, and it does take a little bit of everything.
Sure, absolutely. And just speaking about, what the future energy mix is, there is, of course, a lot of debate over the role of natural gas in the future as we transition away from more carbon-intensive resources like coal and oil. What do you see, Alan, as the future of natural gas and LNG?
Great question. I think, when you look at natural gas and you stack it up against other forms, other carbon intensive coal to oil burning facilities, natural gas is probably the lowest in terms of CO2 that it does emit. And we have an abundance of natural gas. It's clean burning, it's safe, it's reliable. And when you think about Canada's role, and even in Northeast BC, we're taking it to the point where we're liquefying natural gas and we're helping out other jurisdictions that don't have access to LNG for that low cost, reliable fuel source they're going to need for the future as we try to transition, which are the most economical renewable sources that are out there. So LNG plays a huge part in us as a global entity and in Canada as reducing our emissions on a yearly basis. Natural gas will play a big part of that.
All right. Well, we only have about a minute here, and I thought that it might be fun to go through a bit of a flash round of questions, a lightning round, if you will, just one word answers. And I have a few here. We'll start with Max. Carbon capture or hydrogen?
Both.
That's cheating, Max, but we'll move on. Ellen, carbon tax or carbon market?
Carbon market.
All right. Max, the year that Enbridge's alternative energy profits surpass its fossil fuel profits?
Oh, 2050.
One word answer. All right, 2050. Ellen, the car you drive?
Electric in 2035.
Okay, so you're putting a forecast on the car that you drive. All right. Max, the year that oil demand peaks?
2045.
Okay. Ellen, the year that natural gas demand peaks?
2055.
Okay, last questions for you guys, I promise. Max, where will natural gas prices peak this winter?
Ooh, I'm not a good prognosticator. Higher.
Okay. And Ellen, when do we start seeing some of your clients convert oil pipelines and gas pipelines into hydrogen pipelines?
2030.
Wow, that's sooner than I thought you'd say. Well, this concludes the panel on Canadian energy transition. Thank you so much, Max and Ellen, for joining us to discuss the transition and how Canada's energy industry can bring that about. It was fascinating to learn about what your companies are doing, and I look forward to seeing how the future plays out.
Hi. Hello, everyone. Thank you for dialing in to this session, Decarbonizing the Grid panel. I'm Yayoi Sekini. I'm with the Decentralized Energy Group at BNEF, Bloomberg NEF. I'm excited to introduce our panelists today, who are Julian Deschâtel, who is Managing Director at Brookfield Renewable, one of the largest publicly traded renewable power platforms with more than 20 gigawatts of generating capacity, as well as Matthew Lepage, who is Chief Financial Officer at Energear, a natural gas distributor with a big footprint in Quebec and the US, with more than 520 customers across the different geographies. The big topic for today is the fact that at the back of the pandemic, we are looking very much at how to reconstruct the economy, thinking about decarbonization. There's a lot of companies making huge commitments towards that. Likewise, in the context of Brookfield and Energear, which we'll be hearing about today, and there's also a lot of pressure from investors into looking at decarbonization as well. So with that, I will already jump into the questions, and probably starting with you there, Julian. So Brookfield Renewable has a massive portfolio. I mentioned the kind of 20 gigawatt generating capacity. You manage $59 billion of assets under your management. It's almost like 6,000 power generating facilities across hydro, wind, and solar. So I think for the audience, it would be great to hear a little bit about how your organization is approaching the opportunity and challenge of grid decarbonization. And is there a lesson to the industry that the industry could learn from what you've done so far?
Thanks for the introduction and great question. If I step back, decarbonization is progressing extremely rapidly. In the past 18 months alone, I'm sure you've seen the stats, but the number of countries that have signed up to net zero is now over 130. That represents 75% of global GHG emissions. And the number of corporates that are signing up is also equally impressive at over 3,000 and increasing, it seems, weekly. So we very much at Brookfield Renewable believe that this will create one of the greatest commercial opportunities in our time. It will require $150 trillion of capital over the next 3 decades to achieve these targets. Investment in renewable power alone is expected to increase tenfold over this period. At Brookfield Renewable, we believe we're very well positioned to capitalize on this opportunity. We have the scale, as you've mentioned. We, as you've said, own and operate one of the largest fleets globally at 20 gigawatts of operating assets. We also have a very large development pipeline at over 31 gigawatts. We operate across a number of different asset classes, right? We are in hydro, we're in wind, we're in solar, we're in energy transition, and we operate across 5 continents. That's first, the scale. The second, we have deep operating expertise. We have over 3,000 employees, skilled operators, developers, and power marketing professionals that give us tremendous depth and operational expertise, which many of the corporates in particular will be that they need to get to their net zero targets. And finally, we have a leading industry balance sheet that allows us the comfort and the confidence that we will be able to access cost-effective capital to fund all of this growth.
Yeah, scale and operational expertise. I mean, being in the business with such a big portfolio, it seems like there definitely is an advantage to like expanding that portfolio and into new areas also that you've mentioned. I would like to go on to you, Matthew, to get some perspective also from, and you're here just from the perspective of a natural gas distribution operator, as well as the fact that you have operations on the electric power distribution grid as well in the US. You do service, as I said, 520,000 customers across Quebec in the US, and being the largest gas distribution company in Quebec, I'm sure there is a specific position in which it's challenging for you to meet also these decarbonization targets. The audience, I mean, the same question to you, like how are you approaching the decarbonization challenge, and what can the industry learn from you?
A great question, and thanks for having us on this panel. It's very appreciated. So at Énergir, we believe that the cleanest form of energy that is the energy that is not consumed, basically. So, and that's why over the last 20 years, we've been investing in more than 130,000 energy efficiency projects for our customers in Quebec, which have led to more than 1 million tons of avoided CO2 equivalent emissions. With that said, we need to address now the intensity of the energy that is consumed, and it's why over the past year, Énergir has developed a corporate vision for 2030 and 2050 that will enable it to decarbonize its networks. The vision is on 4 main orientations. Continue to invest in our energy efficiency projects. That's the first and foremost things we have to do. Actively participating in the race for renewable natural gas. Everyone is looking for it. We have to get it. We have a target of having it represent a minimum of 10% of our annual volumes we distribute by 2030. So we need to find renewable natural gas. Continue to diversify Énergir activities to promote new vectors, such as green hydrogen sector. We need to look into that. And finally, to the surprise of many, I think, by developing a strong complementarity with electricity. And I think this is where Énergir believes it can stand out. We believe that we now have to think using the right energy in the right place at the right time at the lowest cost to society. What we mean by that, just as an example, we're aiming to reduce by 30% the GHG emissions from buildings we serve today by 2030, and we're aiming to be carbon neutral in this sector by 2050. How? With greater complementarity with electricity. A portion of certain usage of natural gas can be electrified economically today, while natural gas could be used during peak period, such as the cold snaps in Quebec, right? So it's reducing the footprint of the building, but using natural gas when it's economic for the customer to do so. We think that by switching heating of those buildings to electricity, we can reduce by 70% the usage of natural gas, but save an enormous amount of money for customers by using natural gas in peak periods. It's not just an idea. We actually announced last July a partnership, a very unique partnership with Hydro-Québec to do so. It's currently in front of our regulators, and we hope this is going to be approved and put in service within the next year.
That's really interesting. And just to tease a little bit more on that on that point, so you're talking about energy efficiency and reducing gas consumption, which obviously you distribute. How do you align incentives to continue to grow your company in a kind of in an environment where you're actually reducing the actual products that would have been typically incumbent to your business?
Great question. Our focus now is on creating value, not distribute volumes. The deal with Hydro-Québec is a value shift. So by keeping the peak consumption, we're generating so much value by avoiding investment in grid, in generating assets that are used very small period of time. So there's a value shift from Hydro-Québec to Énergir to compensate the loss in volume. So it's really finding where's the value and just sharing it amongst society. So it's going to be very, very little marginal rate pressure for customers because we are finding the value where it is.
Yeah, and actually that leads well to the next question that I have, and I think Julian, you can maybe give some perspective on the supply side there. But on grid decarbonization, it does require significant investment on both new generation as well as grid infrastructure. Grid infrastructure tends to be generally regulated returns as a form of an investment, while generation can be quite mixed. You can have contracted structures as well as like pretty merchant projects. Which of these is Brookfield Renewable typically focused on, and why?
Yeah, I mean, given the nature of our business, we're very much focused on building out the power generation aspect of it. And, you know, over the past 10 years, we've built out not only a business of scale, but I think we've been very focused on building a very highly diversified business. Because you don't want to be beholden to one technology or one geography. So now we have the flexibility to pursue what we would call the best risk-adjusted returns, opportunities regardless of geography, asset, or revenue profile, right? So we have that scale, we have that confidence and that depth of expertise that allows us to be nimble in our business, in our opportunities that we pursue. If we just look at it from a credit profile perspective, right now, our business is 85% contracted, 15% merchant, right? So we are comfortable with that merchant component. We also, when you look at our geographies, 70% is across North America and Europe. There's still 30% in Latin America, Brazil, Colombia, China, and India, as an example. And also, the other element we don't talk about too much is we have a deep portfolio of clients and creditworthy customers. We're selling to not only utilities, governments, but also corporates. And on that point, that's what maybe the next evolution as well in our business is we're seeing an increased amount of interaction and activity with large corporates that have embarked on this decarbonization journey, yet they don't have necessarily the skill set and the experience and the know-how to get to net zero. So we're very happy to partner with them and work with them on that. And recently, we signed a strategic collaboration with Amazon, for example, to develop renewable power energy projects for them, but also work together with them on additional green energy opportunities in the future. I mean, I think that's obviously a significant achievement for us. We're obviously quite pleased to be partnering with the largest corporate buyer of renewable power, and I think it'll leverage and it'll showcase our operating and development capabilities across the globe.
Yeah, that's actually quite exciting, like the movement of being even closer or in direct contact with these customers, these corporate customers who clearly have very ambitious decarbonization targets, and help move the needle pretty quickly when they come to these commitments. I guess in terms of how Énergir is thinking about it, Matthew, on the grid decarbonization front, and maybe on the same question to you, but more focused on the regulated returns portion. You spoke a little bit about this value shift. Is this going to continue to be a bit of the strategy around the business to be more focused on the grid infrastructure bit? I know there's some activity actually in other parts of the business, but interested to hear what your position there is.
At Energy, we do both. We do regulated investment and a lot of it, but we do also generation too. We don't look at absolute returns. We look at returns adjusted for risk. And when you can manage both, we invest where it makes sense to do so. In Vermont, through our subsidiary Green Mountain Power, we are vertically integrated. So we do actually generation in regulated investment when it makes sense for customers to do so. If it's better for customers that we own the assets, we do. If it's better for Green Mountain Power to sign a long-term PPA with Brookfield Renewable because they give me a really good price, we will do it, right? So it's really where it suits better the customers in that sense. We saw an opportunity in the solar industry, in the C&I market. There's a niche market that we thought we could be very effective. So we made an investment through a company in the US 5 years ago. It's been very successful for us. This market is growing rapidly and we're happy to be part of it. We're not the size of Brookfield, like clearly not, but we are making a risk-adjusted return that makes sense for us in our portfolio.
Yeah, and I think besides the commercial solar business, which is quite interesting, you also own a stake in wind farms as well, right? So
yes, absolutely. Again, in Quebec, very regulated. Like if you have a 25-year PPA with Hydro-Québec, I mean that's pretty much as a regulated type of contract, right? So.
Yeah. That's pretty interesting. It's good to get some perspective, actually, of this share between quite contracted revenues and regulated returns, as well as, of course, the emergence of new opportunities that might also be more merchant, as investors or companies have different risk appetites.
I guess clearly, Brookfield have an appetite for merchant or uncontracted for a piece of it. We don't really. Right. So this is that where we kind of share the market.
Mm-hmm. Mm-hmm. Got it. Yeah, and I think this brings us to my next question, which is more thinking about like the investors and your relationship with the world of finance and how that's changing, and how that's influencing your decisions. You spoke specifically about your customer side, but what about on the side of the investments? What's influencing decisions? We've seen a lot of signs of in the oil and gas industry having to essentially reconsider strategies due to investor demands. So that's examples like ExxonMobil and Engine Number One, and other examples with like shale drilling becoming increasingly difficult because investors don't have as much appetite to invest in these assets. The question is like, could utilities be next, and what difference would this make?
What will be next is organizations that are not adapting to the new reality. And energy is. So we are adapting our business model. We are investing to decarbonize. That's what's important. Like so I'm not worried about energy. Is this influencing our decisions from a finance standpoint? I don't think it is, because we have a strategy that's aligned with where the world is going, and I think that's what matters. Like an organization that will embrace the change, make a difference, will find investors, either on the equity side or on the debt side. I'm not concerned about that.
Mm-hmm. I guess similar question to you, Julian. Do you find that investor pressure, maybe that there's an upside there for you, but has this changed anything about how you think about investments and expansion, or is it just more of the same for you?
I think there's two things. I think definitely it's a lot of it's the same. Like we're benefiting, we're beneficiary of what's going on. There's more capital coming to our sector, and so we're clearly benefiting from it. We've seen, if we just want to get quickly into capital markets before we get into investments, we're seeing a significant increase in capital. We're seeing green bond issuances, increase threefold. We're seeing ESG funds, their sort of flows of capital there now have increased 4 times in the last, by factors of 4 in the past 18 months. we're now seeing regularly in the capital markets when a green issuance comes out. It is, at a discount to a traditional bond. We're seeing banks now coming to us and offering us, discounts tied to sustainability-linked or green-based loans. So there is definitely a lot of capital coming into the renewable power industry. And as you know, we were one of the first in Canada to issue green bonds. We're one of the first corporates. We did a project bond way back in 2017. We implemented a green bond framework in 2018, and we issued our first green bond shortly thereafter. We've now issued over $4 billion worth of green securities out, and it's just expanding as well. We have a sustainability-linked loan now. We also issued green fixed for life perpetual preferred securities in the U.S. market. Just tells you that there's depth, there's a lot of capital out there. When I look at investments, and I think people have seen this, we're increasingly, we've identified an opportunity to partner with businesses like Énergir and others we're currently raising our transition fund, which will again not only be there to help with building out renewable power, but it will also be there, that capital, to be invested in businesses that are looking to transition from high carbon intensive industries to a decarbonized business. And so we're going to be there to partner with those businesses. For example, just very quickly, in the green hydrogen space, we've partnered with Gazifère. It's an Enbridge subsidiary where we're going to build an electrolyzer, supply the green power from our Lièvre hydro facilities, and then hydrogen will be taken and put into Gazifère's gas distribution network. So that's one example around transition.
Mm-hmm. Yeah, that's really interesting. There's quite a lot, I feel like, to unpack, and different initiatives on your end. We're basically at time. If you have, so I'll end with just a rapid fire, which is just to say one or two words. And I'm putting you on the spot here on what do you want the audience to take away as a learning, and maybe from your experience that can help them in this journey. What word would you pick out? I'll start with you, Julian.
To me, I think the key word is to be successful. I think you need depth in your operations. You need industry expertise, and you need to diversify. Diversification is a key word for me. You can't be beholden to, again, as I mentioned, one geography or one technology. The ability to grow with this and the industry, and certainly renewable power, will need more than wind, solar. We're going to need to expand into batteries, hydrogen, and carbon capture to meet the net zero targets that everyone has set.
Right. A little more than two words, but we'll take that with us. Matthew, question for you. 2 words on advice to the audience.
I'll say energy efficiency. As you can see, the light went off in my room because we have automated lights. So my word would be energy efficiency. And the second one would be adapt your business model. Make sure that you're nimble and you can adapt. The world will change, rules will change, regulation will change, and you need to be nimble to adapt for it.
Yeah. Those are really great. Yeah, thank you both so much for your contributions. It was super informative. There is a part 2 to this discussion with a different group of people, which is the next session following this. But I would like to thank both you, Julian and Matthew, for this session. It's been really great to connect and hear what you're doing. Thank you.
Thank you.
Awesome. Thank you.
Hi there, and thank you for joining us for this panel, which is on decarbonizing the grid. I'm joined by Arthur Kacprzak, who's the CFO for Algonquin Power and Utilities, André-Lise Metto, who is the CEO of Cycle Capital Management, and Todd Stack, who's the CFO for TransAlta. Welcome, everyone, and thank you for joining us. This is obviously a very current topic with all the conversations that are happening around climate, decarbonizing the grid. there must be, we presume, a huge financial opportunity and various challenges associated with that. So I suppose just to frame it for everyone who's less familiar with this, is this an opportunity from your point of view for your organizations? Is it a global opportunity? Is it an opportunity specific to Canada or to North America? Where do you see the big opportunities? And I realize it may be different depending on your organizations. Arthur, could you go first, maybe?
Sure. Good morning, everyone. So from our purposes, look, our business is primarily a North American business. We're positioned basically around 90% of our business is right now in the United States. We have obviously also operations in Canada where we started, and some operations in Bermuda and Chile. But our main focus right now continues to be North America, and I would say probably primarily in the U.S. market. And I would say we're very encouraged in the where the U.S. is going and how it's positioning itself with respect to climate change. And with that, we find there's a lot of opportunities to unearth there. I mean, our business, we operate both on the regulated utilities. We own both electric, gas, and water utilities there. And we also operate, obviously, our renewable business there as well.
Got it. Todd, Arthur mentioned that the majority of their business is in North America and specifically a high proportion in the US. I mean, when I think about grid decarbonization and I just look at the numbers, because of the high penetration of hydro in Canada, the grid is actually already mostly decarbonized if we compare this to the US. So Joe Biden's put in place this target to be 80% decarbonized by 2030 in the US. Canada's already at 85% decarbonized. So does that mean that if we're thinking about North America, most of the opportunity here is south of the border?
Yeah, I would agree with what you said. I mean, clearly, Quebec, BC, Manitoba have, fantastic hydro resources that they've been able to utilize. Other provinces, maybe not so fortunate in that resource base, and Alberta, of course, being one of them. And, TransAlta's been building wind farms here since the early 2000s. But as you say, the opportunity set is relatively small, even in this market. And we've seen tremendous inflow of interest in and actual development of wind facilities. So we actually, we do have significant operations in the U.S. and do see a huge opportunity set down there. We've seen, again, it's really each state is unique, but many of the states are moving towards decarbonization as well, and see a lot of opportunity set around the country. We do see additional, we have operations down in Australia as well. The federal targets for reduction down there aren't as strong as, say, Canada or the U.S., but still opportunities with customers looking to decarbonize their own portfolios. And so really doing, above and beyond sort of what the government's mandating. But again, big opportunity set in the U.S. for sure, and active in all of those markets.
Got it. And André-Lise, in your role, I suppose you're looking at a lot of new technologies. So maybe my question is wrongly framed when I'm talking about, what geographies are interesting. Maybe you do have a view on that, or is it new technological areas that are interesting? Where do you see the big opportunity here?
I would say in terms of technologies, we have a lot of possibility and opportunity around the world. I will say the real challenge, it's not the technology. The real challenge is the scale up of technology. We have amazing experience with the big corporate or big industrial who are totally key around the table. Just imagine, we start from the lab, we have an idea, we have a young entrepreneur with a young group, and they need to have a conversation with the CFO of TransAlta. It's a gap. And we need absolutely to help them to bring the right conversation around the table. And through this aspect, the scale-up aspect, we need 2-3 things. At the beginning of investment, we need to understand how much money we need to reach the real destination. And the real destination, it's an exit, a partnership with a big company, big sales for the startup. And in our experience, what we learned last 10 years, I think investor like us with a clear background in IP and in engineering, we can set the right table. But to make sure we scale up properly, we need to have big corporates around our funds and around our companies in our portfolio. And let me share one example. We are one of the investors in Enerchem. We're taking waste and producing green molecules. We did very well on the startup phase. But at the right moment, Suncor became, and what they bring is 25 people in our plan in Edmonton, and changed totally. It was a super big game changer for the company. And now it's about execution. We are doing well because we bring this experience. The other problem we have, it's not the opportunity and the market, it's how much will cost to upscale properly. Because failures in the industrial world, it's a really high cost. And our role, it's manage and take the right route of upscale with the right people, with enough deep pocket around the table. And I think it's the principal challenge. In my point of view, technologies are hard there. We just need to have the right route for them.
It's an interesting. Oh, sorry. Were you gonna cut in?
I was gonna just maybe jump in on that same vein that maybe there's a lot of different for decarbonization, and I know we're talking about decarbonization of the grid, but I mean I think that there's we need to think almost broader when we think about decarbonization, right? And I mean as we kind of think of as our business, right? And maybe on that same theme, I mean, yes, I mean, 55% of our regulated business is electricity, right? Electricity distribution. But I mean, if you look at the other parts of our business, such as the investments that have been made into gas distribution, right, or even water infrastructure, I mean, those themselves have tremendous opportunities that we are actually looking at, whether it be, for example, investments into RNG, where you're basically using agricultural or other biological type waste and being able to produce this renewable natural gas that you can basically inject into your distribution system, right? So that's a big opportunity, I believe, to decarbonize some of the existing gas infrastructure. On the water side, too, I mean, and maybe on the same vein of new investments. I mean, there's so much electricity that goes into doing something with water, right? That's there's I think a lot of opportunities to kind of take that and be able to green the processing of water, but by pairing it with renewables. And again, so there's a lot of lot more we can do besides just call it decarbonizing the grid.
And I think you're totally right with the circular economy topic. And if I take just one example, in our company, we have a company who's producing biocoal. And with that, we take waste wood from Canada. And with this technology, we can provide to Japan something to replace coal. And they don't need to change any infrastructure. But they will bring them at the level of classic gas, natural gas, instead of coal in terms of CO2. And what is really interesting is to how we can recirculate properly waste, energy, decarbonization. And it's not just about the grid, it's about the whole system, because the oil and gas industry, we need absolutely these talent around the table, because if they know brown molecules, they know green molecules, and we need that for cosmetic, for many things in our life.
I think this is a really sort of interesting point we're getting here, because we frame this conversation on decarbonizing the grid as if the grid is a problem that needs to decarbonize, and you move on and move to the next thing, whereas in fact the grid is a vehicle for broader decarbonization. So you both decarbonize the grid, and the grid is a catalyst for other areas. And so that's very exciting, and there's lots of new things that can happen. But we did some back of the envelope calculations in our analysis. And we say, for example, in the US, you'd need about $90 billion a year in investment in wind and solar for the country to hit the targets that the government is aspiring to. And we're at about slightly less than half that. So bringing Todd in, because I know that you look at generation a lot in your work, and that's something you're heavily focused on. we talk about these new exciting technologies, but there's a gap there as an opportunity there. But is there also a gap and an opportunity in financing what are relatively mature technologies as well?
Yeah, for sure. I think one of the key words here is transition, right? Like this is not going to happen overnight, and so we need to make sure. One of the challenges currently with renewable energies is the intermittency, and so we need to make sure that we're actually balancing the grids as we move forward. And again, it's not individual companies. That really does rely on the grid operators and the governments to think about how that transition occurs in a fashion and pace that makes sense across the board. And to your point, that does mean that companies who are, firming up that renewable power, whether it's through gas generation or other hydro, peaking capacities, that we're able to actually finance those operations as we transition through to a more renewables business. But you're absolutely seeing the trend where, whether it's debt investors or even equity and equity investors, that what used to be a 2-minute conversation about carbon, and I'm talking 3, 4, 5 years ago, is now probably 50% of the conversation that you're having with investors is about what is your carbon footprint, what is the transition plan, what does your corporate citizenship look like? Those are much, much larger conversations. But in TransAlta's case, with the like I said, we've been building wind farms for a while, but again, transitioning off of coal, moving to gas as a transition fuel for at least the next decade or so, as we ramp down some of the carbon sources and ramp up some of the renewables. And we just built our first battery facility. It's important that we can still maintain financing. And so I think the transition story that TransAlta's brought forward for investors resonates extremely well. And so really, we haven't actually been challenged, but certainly it is something to be aware of for maybe some of the people who are maybe not adopting that transition plan and that future-looking strategy. But definitely, TransAlta's had great access from the banks, great access from bond investors, and certainly on our project finance side, that's also been very, very positive.
It's a really interesting topic you've opened up there, and it's something that I wanted to ask about, actually. We look at oil and gas certainly in the US is not growing despite as much as it was pre-COVID, despite commodities prices being high enough to support that, because there's a lack of finance because of some of these concerns. We also saw the example of what happened with ExxonMobil. Their investors voted in new board members because they felt the company wasn't taking the issue of decarbonization seriously enough. And so this is something that we're seeing happening in oil and gas right now, is the world of finance is kind of imposing a sort of discipline, if you could call it that. Do you think that this is something that is sweeping the power sector as well and is going to influence grid decarbonization? Todd, sort of from what you said, it sounds like the answer is yes. That is something that some of maybe the companies that are further behind yours are feeling the pain on. Would you agree with that? And Arthur and Andre Lisa, I mean, is this trend in finance something that's affecting your organizations as well?
Maybe I'll just start there. Like one other thing I just wanted to add is that, when you're making investments, these are long-term investments. And certainly in the power industry, it's, you're looking at 20, 30 or even longer year projects, looking to get returns over long periods. And again, I'm not an oil and gas expert, but again, similarly, if you're making big investments, you want to make sure that the horizon is there, that you can actually recover the capital. And I think that's one of the challenges right now, is that, there's maybe a bit of unclarity if what you build now will actually survive for 10 years, never mind 20 years. And so I think there is a lot of caution from the corporate side as to say, where do we want to put our money right now? Because I need the longevity there to make sure that we do the right thing for our shareholders and our bondholders.
Got it.
And look, I mean,
sorry, go.
I was going to say, from our perspective, we still continue to have access to capital. I mean, and maybe it goes back to our roots. I mean, we were always, our focus has always been and continues to be around green. I mean, we like to say we're kind of, as renewable developers, going back to our roots. I mean, we're kind of green when it was hip to be green. So to some extent, we're kind of down the right path of where the market is heading. And I mean, look, we've got great access to capital, but we've issued 2 series of green bonds, both on our regulated and renewable sides of our businesses. We just did our first mandatory convertible equity unit, and we actually were the first ones to ever actually stamp those as green as well. So that's a really first for the market. But as of yet, I agree with Todd. I mean, the conversations with a lot of investors are focused around ESG and increasingly so. But the only thing I would kind of maybe leave out there and kind of the thought to leave is, look, if you want to decarbonize the world, you got to be able to support the companies that are going to do it. Right. And I'll give you an example of that. I mean, back in 2017, when we bought our Empire District Electric Company, they had a coal plant. They had a coal plant, and they had a 200 megawatt coal plant. And our thesis for buying this company was, look, we can take this coal plant and we'll be able to shut it down and replace it with renewable generation, 600 megawatts of renewable generation, and we'll reduce greenhouse emissions, and we'll basically save our customers money. And I mean, we went with that thesis and obviously arranging financing. And, I think a lot of investors bought into that, saying like, look, there is, and we got a lot of questions around, look, you're putting coal into your fleet here, but a lot of investors bought into that thesis. Now, have they not done so? Right? It would have been more difficult for us to obviously do what we said we were going to do. And by the way, we actually did shut down a 200 megawatts coal plant earlier this year, and we did deploy 600 megawatts of generation this year. So if investors took a very short-sighted view, that might have not been the case. So I'll maybe leave it with that thought.
It's interesting. It's almost like a question of building up trust. Sorry, go on, Andre Lisa.
But I think ESG, it's clearly the new route for many investors, especially for big pension funds. It's clear, and I think the mandate, it's really clear for many of them. But now I think the real challenge and how we will make this transition, for me, it's not energy transition, it's economical transition, and we need to do that with people. Because the transition is not just for technology or for big players, it's clearly for people who's working for different group in our world. And the other thing, I think we need to change totally our view. If I take an example, if you have a Tesla powered by coal, it's not the same Tesla you have powered by hydroelectricity, solar, or wind. And if you have aluminum powered by coal from Russia, it's not the same aluminum produced by solar or hydroelectricity based in Quebec. And my point of view is we need to become more sophisticated. We need to be more patient, because it's not because we have the vision we can execute properly. And I think the vision all the screens around the planet, the Facebook, the LinkedIn are full of vision. Now it's time for execution. And for that, we need to have strong people, backbone, who know the industry. It can make this transformation. And I think the principal challenge will be the execution. We're no longer in conversation about the vision. And the ESG will bring sort of discipline in terms of financing, and I think it's good. But it's not perfect yet. It's already a big conversation. What will be our extra financial criteria? How we will measure that? Do we need data to make sure we are doing the right thing? It is impact washing. I don't know, but it's a big topic now.
And so do you think there's a danger? I mean, to both the point you made and the point that Arthur was making, that there's a danger that the perfect can become the enemy of the good here, in terms of...
It's already is, in my point of view, because the perfect did never take in account the execution. And execution in this field, it's engineer, it's business people, it's science, takes time. And if you are impassioned, will not happen.
Got it. So we've got about 5 minutes left. I mean, I feel like we could go on for a long time on some of these topics if we really dived into them. There's two things that I wanted to get out of everyone, though, before we go, is could you, sort of based on your experiences in this area, in decarbonizing the grid, or even decarbonization more broadly, I don't want to limit you, what is sort of, if you could give people one lesson that you've learned so far, that you haven't said already on this call. So one lesson you've learned so far. And then one thing that if you could just change one thing to help us with this execution, with us achieving the potential that we see in front of us, what would be that one thing you would change? So who wants to go first? One lesson and one thing that you would change. Todd, you've volunteered.
Yeah, Look, one lesson that I think the company has learned well is that you need to work sort of across with the government entities that are involved in the decarbonization transition, whether that's federal, provincial, or state, and even the local utility and ISO. And what you need to do is make sure that there's a common education understanding of power grids and power supply, how reliability works. And so that relationship, that ongoing education, the electricity, it sounds simple when you talk about wind farms and other things, but the actual operation on a second-by-second basis is incredibly complex of the interrelationships and flows and the regulatory parties involved in making all of that happen. So I think a common understanding and just good education across the board, and then actually having a common understanding of like, how are we going to get from here to where we want to be in the future in a responsible way, both from an economic point of view and from an environmental point of view. So that's one thing that I think we've learned well, and something we really tried to focus on. As far as one thing I would change in the industry, or one thing I would change. Look, I think renewables energy has come to a point where government subsidies for what I would call the more conventional technologies aren't actually required. Wind, solar is economic. I think, one of my views is in the U.S. there's great incentives for renewables build out. It does require often, tax equity partners to make some of that build out. I think it creates undue, complexity in those transactions to make them, economic. And so if there's anything that can be done to simplify how those subsidies are actually applied to project, I think that would be a great outcome from our point of view.
Well, in the latest budget reconciliation, you may be getting some good news on that front if the legislation goes through as it was in the form I last saw it. Who wants to go next?
Yeah, I'll maybe just pick up a little bit on that theme, because it's kind of along the same lines. I mean, like, for sure, grid decarbonization is going to take significant investment, right? And whatever makes that investment more viable is important. I mean, and I'll maybe take the lens more from the regulated side of the house, and being able to really pass on the decarbonization and pass on those savings to customers. I mean, certainly, having regulators on site and having a stable regulatory regimes to be able to get fair returns for owners. I mean, as I think about and on Todd's topic around PTC, ITC, I agree with that. I mean, there's probably certain forms of generation that could stand on its own right now. But the subsidies also do help, and they do help spur investment. And I wholeheartedly agree. It would be great to make it simpler versus the structures that are there right now. But I mean, I would also take those the PTCs, ITCs, some of the more emerging technologies. I think probably could benefit from that support, whether it be from battery technology and so forth. And as you're alluding, I mean, some of that is actually in the budget reconciliation bill right now.
Got it.
In my point of view, rapidly, don't underestimate the complexity of upscale. And I will say what will change is have more people, big corporation around funds like us, because we have innovations in our hands and we need them to scale up properly.
Interesting. So for you, it's the going from the garage to the grid, having help on that mission, getting from in between the two. All right, then.
Yeah,
well,
absolutely.
This has been a really fascinating discussion, and I did send around questions beforehand, and we ended up actually not covering them because I think we went down some really interesting avenues. But a few of the things that I've taken away from this is the grid decarbonization is not just about decarbonizing the grid; it's also a catalyst for decarbonizing everything. It's also about taking out some of the complexity, not letting perfect be the enemy of the good. Some of the new trends in finance are also driving that and dictating what organizations can do and to move in a positive direction. So yeah, it's been fascinating. Thank you very much for your insights, everyone. And for everyone listening, I hope this has been useful, and have a great day.
I'm here with Jason Taylor, who's Managing Director for Sustainability Advisory and Finance at the National Bank of Canada, and Elizabeth Wallace, Senior Manager for Funding and Foreign Exchange in the Capital Markets Division at the Ontario Financing Authority. Delighted to have you both here. This is a fantastic subject. We're seeing huge growth in ESG throughout markets, but particularly in fixed income, which is what I'm focused on. So I just wanted to start, Jason, with a broad question. How big is this market? How fast is it growing? And why is it so important now for Canadian fixed income investors and issuers?
Yeah, great question. And it's something I think a lot of dealers and syndicates grapple with trying to put on forecasts, because it always exceeds. Last year, there was somewhere around 800 billion globally across all labels, and forecasts started to come out that we would potentially see the first $1 trillion year of issuance. And lo and behold, it came in, I believe, the third quarter. So a quarter to go. It's outpacing most of the bank's expectations. So the question is, how far can it really go? And what's exciting is to say that sustainable finance is being democratized and made more accessible to more industries. Not everybody is on a linear pathway. A lot of them are constrained by technology. So that's very encouraging. Locally here, the market is growing very healthy in a healthy way. Last time we're buzzing around 20 billion here in Canada, and with a variety of labels starting to develop. City of Toronto having done a second social bond recently, and Elizabeth will be able to speak about the growth in her program. But and you can see that there's also two and potentially three very important frameworks that are being worked on in the background now that will also add another catalytic effect. So, and we saw this SLB market gain traction here in Canada. So, all in all, growing very, very well in a healthy way, I would say.
Is it across sectors? I mean, Canada's a natural resource country traditionally, but are you seeing it through the banks, through every kind of issuer?
Yeah, I mean, traditionally it's followed the geographic industry splits that you would see in other parts of the world. So power and utilities, financials, and certainly the real estate sector here. But more recently, we saw something emerge from the oil and gas sector, from Enbridge and from TELUS. So you're starting to see more industries. But I would say beyond that as well, the other ones who traditionally may not have been considered to be the high emitting industries are asking a lot of questions, and I think, which is great, it's encouraging for investors, because when they tried to build thematic bond portfolios, they want to be able to not compromise diversification characteristics. So they're now getting a wider diversification across term, across sector, across labels. So you can see that I really use the term democratization. It's becoming very accessible now.
And obviously we'll get to ask this to Elizabeth, but in your view, what are the benefits to an issuer? Are they saving money during this format? Is it a way to get better funding costs for a borrower?
Yeah, there's definitely tangible benefits. The greeniums, it's something that people enjoy to follow. It's always nice to be able to put a financial value on the effort that goes behind working on all these frameworks. Elizabeth will be able to, I'm sure, give us better insight on that. But I think more importantly, there's some very sort of qualitative benefits as well. Green issuance can be very beneficial for accessing green pools of capital, to adding resilience to the funding base, but it's also very effective in some cases mitigating potentially a brown discount that may loom around certain types of profiles. And I think it's enabled to buy some time and create a dialogue with shareholders that that most people recognize that takes time to transition organizations. So it's bringing in a lot of cross collaboration and learning between not only investors but issuers, and in some cases even NGOs. So I think for me, definitely the greenium is always very interesting to follow and point to, but I think there's some qualitative benefits as well that are equally just as material in this process.
Do you want to speak to that a bit, Elizabeth? I mean, what's your perception? Do you save money doing it this way? Is it a diversification of the investor base? Are there other benefits that we haven't looked at or discussed?
Drawing on Ontario's experience as an issuer of green bonds, those are two of the major benefits: the expansion of the investor base and the ability to raise funds in a cost-effective manner. There's also some maybe less thought about benefits that do come to mind. Certainly greater issuer-investor engagement comes through this kind of market. There's just a lot more ongoing dialogue when you're issuing a green bond because of the amount of pre-work you do and also follow-up you do in the way of impact reporting and other things. There's also a higher profile associated with this type of issuance, so you do get maybe more of a spotlight than you would with your regular issuances. So these are some other benefits that might come into play. And really you are provided in some ways with a highly leveraged communication tool by accessing this market. You have a lot of outreach that comes your way because people want to know more about what it is you're doing, how you're doing it, what they can learn from your particular experience. So some sort of more ancillary benefits, but equally important to the cost savings and the broadening of the investor base for sure.
And unlike a lot of ESG issuers, you're quite experienced. You've been quite a trailblazer in this market, and obviously others could learn a lot from your experiences. I mean, what would you say to other types of borrowers that that they should really pay attention to when they're issuing in this format?
So many things. First of all, I just wouldn't underestimate the amount of work it takes to bring a new program to life. The time and effort is quite incredible when I look back on it. But really, so before you endeavor to bring a green bond or other ESG type program into being, I think you first want to consider the fit within your funding program and see if it makes sense for you. Do you need to broaden your investor base? Do you, is this something that makes sense just brass tacks where you're starting from? And then consider whether you have buy-in from both the top and other levels of your organization, because there will be roadblocks. You will need a champion who can help knock those out of the way for you, but you'll also need people to do the work. There's a lot more work involved in these types of issues. And so you need both the top and the bottom working together to make it successful. Preparation is kind of key before you come to market. You have to have done all your homework, got all your ducks in a row. Dealer engagement is another key factor. Getting a framework together takes the input of so many people because you have your organizational view, but you also have external parties that can add a lot of value to putting a framework together that makes sense for you and makes sense for the market. And I'm just thinking even things like the impact reporting. You can't just issue the bond and then hope you'll figure out the impact reporting when the time comes a year later. So being prepared for that, putting processes in place that make a lot of sense because it's a program, not a one-off. You want to make sure you put in robust processes that when they are subject to audit, something like that, stand up well and really support your program and make your program shine in front of investors. So those are some ideas in that space of, what advice would you give? What kind of lessons have you learned? And then again, when we started with FIT, I would also just talk about projects. Do you have a pipeline of projects? If you have one project, there may be a different route to get that funded and get it recognized than a whole program being set up. That's my 2 cents worth on that.
Thank you. Jason, has that been your experience too? I mean, if a first-time issuer comes to you, do you generally steer them towards ESG, or is it really very selective?
You know what? We try to really take a customized approach, and in the past, I've been involved in discussions where we've strongly encouraged the issuer to delay to do some work at the corporate level, because you might hear this over and over, but the reputation in capital markets is something that's built over years, but that can be years built, seconds lost, and I think especially now, even though some people may feel like a transaction will go well because maybe the order book is very high and the funding benefits there, it doesn't mean there can't be any fallout afterwards from some of the press coverage and maybe some of the NGO articles. So we definitely really encourage to take your time and to make sure you dot the I's, cross the T's, and it's really branding, it's image, it's trust, and trust is very fragile. And I think we always encourage people to play the long game. And there's not only the green bond issuance side, but investors are also expressing opinions on the non-green side, and sometimes it could be a question of just fleshing out some of the ESG data and the carbon accounting that could yield just as much benefit before actually accessing the market. And I would say that oftentimes in the past, you can always have the minimum requirements, but you also have certain assurances that are out there that allow you to go above and beyond the minimum requirements that are prescribed by ICMA. So for some cases it makes sense, and others it may be less. So we really try to approach it on a case-by-case basis, and first and foremost, always make sure that we're preserving the integrity of the market, because there's still a substantial amount of capital that needs to move in order to green the infrastructure and meet the SDGs. So we don't want to compromise that reputation of what essentially is the second inning of a 9-inning baseball game.
So what is the best way to communicate with investors then? I mean, they're very confused by all the acronyms, by all the new structures, by many things, and they're also worried about greenwashing. So how do you kind of reach out to the buyers and keep them engaged? Maybe that's one for Elizabeth.
I guess the biggest piece of the communication puzzle with investors would be the annual impact report. At Ontario, we call it our Green Bond newsletter, and we publish it in December of each year. And in that newsletter, you're updating, investors on what the selected projects are up to. You're talking about total funds allocated to projects. You're talking about whether or not you have an assurance audit that's been performed and what the outcome of that audit was. You're projecting the environmental benefits that are associated with your projects. You're talking about your overall processes in terms of how you identify, evaluate, and select projects. So all of those things are part of the communication package that investors should and do expect to be delivered to them on an annual basis. And then above and beyond that, there's things like this particular event and other events that are going on where you have the opportunity to reach out to investors because you're a panelist, because you're a speaker, or just because you're actually physically attending a conference. So you get the time to interact with investors in that format. And then also the one-on-ones. We do take one-on-one meetings and with investors, and we do make sure when we're having those that we have the right people in the room. So it wouldn't just be a funding person. If there's questions about the environmental aspects of a project, we'd make sure that our colleagues from the Ministry of Environment, Conservation and Parks are in the room, in the same way that we would have an economist if people wanted to talk about the economy of Ontario. So we just make sure we have subject area experts available, and then investors feel they can reach out to us and ask the questions they need answers to, and we will take that very seriously and make sure that we provide the best level of communication we can, because it's really about transparency when you're talking about this market, sort of a cornerstone to the whole thing.
Anything else from the dealer side that you do, Jason, to keep the investors happy?
Yeah, and I think it's a dialogue of just saying it's not just because you can, you should. I think most importantly, it's just probably we would encourage people to just be very transparent in what the bond is designed to achieve and what it's not designed to achieve. I think, but I think a lot of this is going to become quickly mathematical certainly as the IFRS Foundation sets up their headquarters and starts to set accounting standards. I think as well as just as the continuation of the ICMA Transition Finance Working Group, for example, that's looking at pathways, and even SBTI has been making some adaptation to some of their frameworks. So I think over time that there's an infrastructure that's building in place, but like all things, that takes time, and the market's improving incrementally on standards and guidelines. So I only see this becoming less and less of a challenge for people. And so I would just add that piece. The regulations coming down and the guidelines is really going to help as well going forward.
Right. Speaking of frameworks, Elizabeth, any evolution in the Ontario framework? Is there a need to update that potentially?
Oh, well, our framework dates to 2014. So this market was, for all intents and purposes, in its infancy, and in Canada was really not even perhaps on most people's radar. So we do have a framework. It does date back to 2014. It was put together in consultation with Cicero. It was I won't say updated, but there were adjustments made to it in 2019. We had a new government come into power in Ontario, and we took the opportunity to realign our green bond program to support the government's plan, which is preserving and protecting our environment for future generations, a Made in Ontario environment plan. But otherwise, it's substantially the document we originally drafted. And the green bond market has evolved. It's been more than 7 years now, and the expectations of investors and other market participants have changed. While our original framework has aged remarkably well, the province plans to update it in the near future, so I would expect that would be sometime in the next 6 to 8 months. Just guessing, but again, the workload's always much greater than I think it is, so perhaps it takes longer, but that's the idea. And we're going to look at the idea of even expanding the framework to be more of a sustainable framework so that we could issue off different platforms, not just green, if we had the need or if we wanted to. Yeah.
Okay. Thank you. And as an innovator in this market, are there any other currencies you consider issuing green bonds in, or any other structures that you haven't tried already that you'd like to maybe issue in?
Well, there's always lots of discussion around what we could possibly do with our green bond program, and that includes expanding it into other currencies. When we started, our commitment was to the Canadian market, to developing the Canadian green bond market. And in doing so, that sort of tethered us, if you will, to Canadian dollars for the foreseeable future. Having said that, international issuance is an important part of our overall borrowing program, and issuing green bonds in other currencies is an ongoing topic of internal discussion. So we recognize that international green bond markets could provide the opportunity to expand our investor base and also offer good price tension relative to non-green issues in those markets. So the discussion's ongoing. We do consider the possibility of issuing in US dollars, euros, or other currencies. Nothing along these lines has been decided at this time, and we'd have to take into account, obviously, things like market conditions, alternative funding opportunities, all of the things you normally would for issuing in any market. And really, the Canadian domestic market has been incredibly receptive to Ontario's green bond program, as evidenced by our most recent issue in July of this year, when we did our largest ever issue of $2.75 billion. So there's a little bit of push and a little bit of pull when you start to look at other markets. And I would say there's definitely pull from other markets. We think there's opportunity there, but we're not really getting pushed out of the Canadian market yet. So there's maybe two sides to that need to work together, and we're not quite there.
Okay, thank you. Question for both of you on greenwashing, which is a huge issue for a lot of people in this market because it's growing so quickly and it's quite confusing for a lot of investors. How do you mitigate that risk? I mean, and how big really is it, do you think, in the Canadian fixed income market?
Jason, actually, I'll start. You have a much broader view, so you can overlay it. So the credibility of green bonds, it's an important issue for the market as a whole, because it doesn't do any of us any favors if that credibility is constantly being called into question. One of the ways we've tried to mitigate that idea is, having a third-party certifier to our framework, having the Auditor General come in and audit our use of proceeds annually. Those kinds of things hopefully help to indicate our honest effort to do the right thing the right way in this particular space. No one gets it exactly right all the time, but I think if you are having external parties come in and look at what you're doing and opine on that, that should help mitigate the greenwashing, I guess the idea that you might be greenwashing. And really, that's about all we can do at our level, is just always try and do our very best and try and reach the highest level we can with the program based, within the constraints and parameters we have. And I think if you're doing that, investors appreciate that kind of effort and sincerity in the effort. And with a few of those things like an audited use of proceeds and a third-party opinion go a long way to kind of, I think, giving credibility to what you're doing. But Jason, I defer to you on this. You have a much broader perspective.
No, I honestly couldn't have said it better myself. I would say that one thing that really helped was when the SPO providers started being more explicit about the issuer level alignment. There seemed to, at one point, to have been a disconnect between the use of proceeds and then there was an article in Bloomberg last August, it was from the BIS, just talking about a sample of green bond issuers that hadn't achieved what they had set out from issuance in previous years. So now you have a much more formal link between the bond level and the company level. So I think that would made a big progress. And I agree, the assurances are important. And there's even the impact report in some cases. I know investors appreciate that. They appreciate the audited use of proceeds, as mentioned. And I think also just having high quality issuers such as the province of Ontario that could provide a blueprint and a template for others that are looking at the market for them to follow and try to always achieve that high standard. And I think also goes a long way to leading by example and having these issuers that demonstrate and not only that share their experience and their knowledge. Elizabeth, I know you've had an influence on me and helped me learn and grow in the space, and hopefully the others in the market, and hopefully we can bring that message to the other programs that are building. So I think it comes to a point as well as a show at some point and not tell, and having programs like this and other issuers that, without excluding any, I won't mention the others, but there are others as well that help us just to always try to keep the bar up there and keep the greenwashing at bay.
Okay, Jason, Elizabeth, unfortunately, we're out of time. I've got a million other questions for you, and I'm really excited to keep this conversation going at Bloomberg. So we'll be talking for many years to come, I hope. Thank you so much for being on our panel.
Thank you.
Thank you for the time.
Good afternoon, everyone, and welcome to the second ESG panel. My name is Alistair Marsh. I'm a reporter here at Bloomberg covering ESG. I'm delighted to be hosting a panel today with Denise Adaro, who's Head of Investor Relations at IFC, the International Finance Corp, and Guillaume Pichard, who is Managing Director of Capital Markets and Treasury at the Quebec Ministry of Finance. I wondered, as a way of introducing yourselves to the audience, to our viewers today, if you could describe each in turn, and Denise, I'm going to ask you to start, please. Describe your ESG strategy and your approach. Give some specific insights and best practices about how ESG is implemented in your institution. So Denise, please enlighten us.
Thank you very much for having me. I'd like to share with the audience that for those who are not aware, IFC's history in itself is intertwined with ESG. And we opened the business over 60 years ago when the world was in a different frame of what we now call Build Back Better after World War II. Our mandate has been private sector development. And for that, to achieve that, essentially that's meant creating a path for others to follow in our member countries, which is around 184 countries. And so IFC's ESG policies, guidelines and tools are widely adopted as market standards, which is one way that IFC helps raise ESG standards and level the playing field within our emerging market member countries. Now, specifically, I would say that, as the audience no doubt appreciates, doing business in emerging markets comes with challenges. And some of these seemingly are the ever-present risks that we now call ESG. So environmental, social, and governance due diligence of a project and its financing were and remain important as part of our credit analysis for every single IFC investment we make, be it loans, bonds, or equity. And secondly, we also provide an array of guidance for the market in general. And that's a holistic management, sort of how do you manage potential or actual changes to the environment or, the surrounding community in workers and improving governance. And thirdly, we also provide integrated ESG advice. IFC's performance standards were, in fact, the blueprint for the Equator Principles. And I can talk a bit more about that as we go on during this panel. Nearly 90% of our clients believe that ESG support is key to helping them reach their long-term business goals. And I'll end with our most recent innovation, which is within, would you like me to stop there? Because I was going to talk about just the ESG survey.
Tell us the last one.
Okay. Our most recent innovation, which is only 2 years old, we were the first issuer to begin assessing underwriters based on their ESG. And we are now doing this on an annual basis. And the results of this assessment goes into our mandate selection process.
Fascinating. Okay, well, we're going to get into the sort of nitty-gritty of bond market mechanics in a minute. Cost of issuance and selecting managers sounds fascinating. Guillaume, let me ask you, though, the same question. Perhaps you could introduce a little bit your approach to ESG.
Sure. Well, working for government, as you know, one's aware that we do engage in a broad spectrums of field in ESG. And back in 2017, at the Department of Finance, we decided to engage in a green bond program and set up something that would reach high standard of the market at the time and continue to reach for a high standard of this market as of now. And the goal was to highlight projects inside the government that really have a direct impact on the environment in terms of emissions, trying to address climate change at the same time. So far it's been I would say, not shy to say, it's been a real success. We've been able to issue 6 green bonds, for a total of $3.3 billion. Our last one done in May was a $500 million CAD issuance, the first 10-year issue for a province. And the proceeds of these green bonds mainly so far have addressed projects in the public transit area, energy efficiency, and lastly, we just dispersed a good amount towards a project that touches a little bit on the S of the ESG universal. It's a universal accessibility program to refurbish or just put up to date some metro station in the area of Montreal, so they'll be more accessible to everyone riding the metro. Look, going forward, what we do want to is to broaden the specter of project eligible inside our green bond program, trying to see if we can do more in terms of energy efficiency, green buildings, or down the road, we don't have one right now, but it address climate change and resilience. So we'll see where it takes us from there.
Okay, fascinating. Thank you. Well, you've both spoken very articulately about the concrete things that you're doing, and it's encouraging to hear. But one of the kind of a narrative that I hear frequently at the moment is this idea of questioning the effectiveness of ESG, i.e., is it a kind of a great marketing tool for Wall Street salespeople, or is it something of substance that can have an impact on things like social mobility and on the climate change and so on? And I've been, one theory I have is that for ESG to be effective, especially in the debt markets, it should, in theory, have an impact on the cost of capital or on the cost of issuance. And I wonder if you agree with that idea, and if you already see it happening. I mean, Guillaume, perhaps you've mentioned about selling, green bonds recently. How do you think about this?
Well, when we first starting to do this in 2017, I must say we were on par with our regular curves of bonds, but gradually the market evolved, and the demand was just so high for green bonds or ESG bonds in general. We get, let's just say, we only have room. The last one I mentioned for 500 million, we had a book close to $3 billion. So at one point, you are able to price inside your regular curve. I must say I can price it around 2 basis points right now. So cost of issuance is going down for green bonds and other ESG bonds. But maybe another thing is that, does it have an impact? And inside government, I must say, does, because there's the critique we get is you're going to fund these projects anyways. Yes, we are going to fund them. However, look, we're looking to make the projects we're going to fund anyways better for the environment. We're looking to qualify them for our green bond program, and that's something we didn't look for 4 years ago. So I think that's what the green bond space has brought inside government for us. Okay.
And Denise, from your perspective, also IFC an issuer in the markets, you mentioned something very interesting about manager selection or underwriter selection a moment ago, which I guess talks, if I understood you correctly, to sort of assessing the credibility of different market players on issues, on their kind of ESG credibility. How do you think about? Well, let me ask you 2 questions, if I can. One is, why did you do that? And tell me a little bit more about it. But then secondly, maybe you could also address this issue of kind of the effectiveness of ESG and kind of it being priced into the market. Your thoughts around that?
Well, I'll turn it back, and I'll answer the latter one first. Okay. So essentially, I would say I think of it in 2 ways. So one, the question around what's the additionality of ESG, and IFC's role. We're essentially a bank, aren't we? So we are making loans and equity investments and what have you. And what we have seen with our own portfolio is that better ESG performance has equated better financial performance in the long run. And so I think it's no longer a moot point. I mean, even though there seems to be this debate around that, but by and large, what we are seeing is that studies are showing that. So that's on the lending and the investment side of things. And again, in particular, I think the markets that we operate in as such that I would say are the muddy waters that should you not consider ESG, then it really is folly going in blindsided into these markets. And then I would say on the Treasury side, in terms of our own funding program, the reason that we began, we are a prolific and have been a prolific sustainable bond issuer. We play many, many roles in this market, and I'm sure the audience are aware of. Our green bond program is now $10 billion outstanding, in issuance, forgive me, not outstanding, about 5.5 outstanding. And what we are doing is even beyond our green bond program. So we have a $17 billion funding program on an annual basis. We are now selecting underwriters for the entire program based on numerous variables, but a key one being, well, what is their ESG standing? And by that, it goes beyond how well can they structure and sell our bonds, but rather, are they walking this talk internally and externally? So it's really an initiative that I think we will begin to see a lot more of. That we have seen a number of issuers who have come to us asking how we're doing this with the intent to replicate this. So I do think that from where we are looking, this is something that is here to stay.
That's very interesting. A follow-up, if I may. I know we weren't planning on talking about this, but it's very fascinating. And that is simply: are there some underwriters who then who've had to be excluded by IFC, or are there others who've had to kind of perhaps up their game or work with you to up their game on these topics? I mean, these sort of incentive mechanisms for doing better on ESG is very interesting.
So it's almost similar to the debate around, engagement or divestment. We're taking the engagement route right now, and because the weighting of the ESG component makes up 10% of the overall dealer assessment and decisions. They are, as I said, other variables that are considered. However, we are engaging very fully with particularly those dealers that are below average in their assessment. And so that's taking up a great deal amount of time, as you can imagine. We sent the survey out to about 60 banks. But the good news is, I will say, that we are seeing, these conversations go beyond the debt capital market desk. I mean, it's going all the way through the institution, and that in itself is a measure of success for us. Is this during, in the hallways of these banks, are they having this conversation that is no longer, kept within the CSR department and the marketing divisions?
Great. Okay. I mean, I was interested to ask you that question because going back to the earlier point about is ESG effective or is it marketing? There's a sort of, I would call it a scourge on the industry, or a potential reputational stain always there being greenwashing. No one wants to be tarred with that brush. And I just wonder, yourselves as sort of big issuers, and big players in the market, if this is something that and this is a question to both of you, if this is something that you're kind of constantly on guard about, and how you think it sort of materializes, or where you see it crop up. Dion, maybe I'll ask you since I asked Denise the last time.
Yeah, sure. Well, yeah, it's something that's in the back of our mind. You'd never want to get accused or just of greenwashing. So, look, right when. And I think all major issuers are taking the steps I'm going to go through it. Following the green bond principles, following international guidelines that are coming into play, like the Canadian taxonomy, like the taxonomy in Euro. So that's one thing to do. For ourselves, look, we've set up our green bond program. We have a second opinion on it by Cicero, which is dark green. We also are asking our Auditor General to really tell investors that the proceeds from the green bond really did go to the projects that were highlighted. That's something that, if auditor generals around the planet, that's not something that it's done lightly. It's done very meticulously. And the other thing I would tell some investors who are new or just coming into the ESG space is, if you see an issuer, ask him the first question: is your potential green bond, your potential ESG bond, is this going to be a one-off, or what's your plan going forward? You've set up a program, you've set up a framework, but what are you going to do? What's your end goal on this? So if the issuer doesn't have some clear answers, has only planned for a one-off, well, ask some more questions. But to been in this space for quite a while now, I haven't seen major issuers greenwashing. I think it's something we're very cognizant that we're never going to go there. And like I've mentioned in my introduction, we want most big issuers want to bring high standard quality product to the green bond space and the ESG space.
Right. Okay, thank you. Well, let's talk about product, actually, because that's another thing that's been very interesting over the past year, 18 months, and just the proliferation of ESG bonds. I mean, we have green bonds, we have sustainability-linked bonds, you have blue bonds, all kinds of different colored bonds. I mean, it gets a little bit confusing at times to try to keep up. Yeah. Maybe you could tell me, Guillaume, maybe I'll start with you. Are there other, within your own sort of funding programs, are there other ESG, have you issued other or plan to issue other ESG type debt? Or if not, do you have opinion on these other types of bonds?
That's a very fair question. Look, we want to stick with our green bond label. As a government, at the end of the day, there has to be a reason why we raise debt instrument, which a green bond is. And we went down the road of infrastructure projects, which we already borrowed for. And if we do have some social or some governance projects, well, we'll use our green bond program and platform to do so, like we've done with the recent project of the accessible university in accessible. Sorry about that, but the project I meant, and for the Montreal Metro.
Yeah. Okay. And Denise, then maybe turning the same question to you, could you maybe talk about sort of how ESG momentum that we've been describing has altered your funding programs? Of course, green bonds, but are there other types of sustainability-linked social bonds, blue bonds? I mean, as I said, there's a whole array. How do you think about it, and how has it been in practice for you?
So I wear two hats here. One as head of investor relations for IFC, but also I am the chair of the green bond principles, so the suite of the green social bonds, sustainability-linked bonds, etc. And so on the IFC side, we do have two active programs, the green bond and social bond programs, and what I will say is that because of the work that we do, which our mission is capital market development, one of our missions, and of course, that has meant that over the last 10 years, we've played a very significant role in promoting the market in terms of supply and, of course, providing capacity building and investor education. So on the Green Bond Principles side, we do an extraordinary amount of work in the Executive Committee in terms of leading, of course, with the support of ICMA as the Secretariat, in terms of providing the market more guidance around what is what. And essentially, the updates you will see to the principles that we put out a few months ago now has this diagram that paints it out. Because I do agree with you, it is one of my pet peeves, is the alphabet soup of this entire sector, and that goes beyond green bond, beyond the bond market, into ESG more generally. And so I hope that the audience understands to think of it in this way. So you have the umbrella of sustainable bonds, and which are bonds that essentially embed sustainability aspects into them. And then you have green bonds, you have social bonds, and then linked bonds, right? So use of proceeds and then performance-based. So depending on, you can call as an issuer, it's your decision if you want to call it a purple bond or blue or whatever it is. But the market at this point, the best practice is following the frameworks as they currently are. So it may be a blue bond because, of course, it has, exposure to marine or related use of proceeds, but it is essentially a green bond. You've just decided to call it a blue bond because the Green Bond Principles covers that use of proceeds. And similarly, on the social bond side, it is a wider array of use of proceeds. And so you may have, as investors, a good example of this is the investor interest, particularly in gender bonds. But it is a social bond. But you may choose to call it that if, as an issuer, so long as, and I think this goes to a point that Guillaume made earlier, which is how sustainable, for want of a better word, is your program? Are you going to be a frequent issuer, or it's a one-off? So if you do have a pipeline of projects for, you name it, gender or blue, then fair enough, it makes sense. Otherwise, I think it is somewhat perhaps punitive for certain investors, because at every point you're having to re-educate investors what this new name or new brand has underneath the hood.
Yeah, thank you. Unfortunately, that's all we've got time for. I feel like this is one of those conversations that we could keep going for a lot longer. But thank you both for sharing your insights and casting some light on what is a complex and sometimes overwhelming market. So thank you both very much.
Thank you for having me.
Thank you.
Hello, everyone. I'm Lauren Keel. I'm the General Manager for Bloomberg Green, Bloomberg Media's brand focused on climate change and sustainability. And today I'm pleased to be joined by Kathy Bardswick, the chairperson for the Sustainable Finance Action Council of Canada. Thanks for joining me, Kathy.
Well, thanks for having me.
Kathy, you've been one of Canada's leading insurance and financial services executives, including time as president and CEO of the Cooperators Group from 2002 to 2016. So given your background in insurance, what drove your interest and focus in sustainability?
Well, you know, through the lens of an insurance leader, I was increasingly becoming quite disturbed with the trends that I was seeing, not only in Canada in terms of the devastation that climate was creating for communities in our country, but I was also part of an international federation of co-op and mutual insurance that brought me into other parts of the world, and the devastation was happening around the globe. And as an insurance leader, I realized that I had a responsibility to do more, to lead more, to ensure that my organization was doing what it needed to do, and that I personally was contributing to solutions associated with what climate has been wreaking, the havoc it's been wreaking around the world.
And you were in that role, as I said, from 2002 to 2016. That's a time of massive change in the climate and sustainability space. So how did your thinking evolve from when you first took on that role, you know, in 2002 to when you were leaving about 5 years ago?
Well, you're absolutely right. You know, oftentimes we are being critical of the lack of progress and the speed with which we're implementing the changes that are needed around the world. But quite frankly, through my lens, I can recall back in 2003, 2004, I was working with UN at the time, trying to establish a conversation in North America associated with principles for responsible insurance. We couldn't get the insurance industry in the room, let alone have commitments being made to the extent that is occurring today. Now, commitments are one thing. Action is clearly what we all want to see. But I have to say that, you know, in spite of the warnings that we're running out of time, we have made substantial progress. I think the level of understanding of how critically important solutions are required across the world and how critically important it is that we get our heads around and embrace the devastation that the planet is facing. It's occurring today, and I think we're starting to realize far more acutely today that time is indeed running out, that we do need to see far more action on the ground. And I'm quite pleased, quite frankly. I'm optimistic based on the level of commitment and action that I'm seeing globally.
And in your current role, you're really at the center of that action in Canada. You are part of the Sustainable Finance Action Council. This is a newly formed organization, May 2021, so it's really very, very quite recent. What motivated the development of this council?
Well, back in 2018, as a result of a pan-Canadian effort, both federally and across the provinces and territories, to put in place a climate response for the country, an expert panel was established to investigate what it would take to establish a more robust, sustainable finance industry for the country, an ecosystem. And that expert panel tabled a series of recommendations in 2019, one of which was to establish the Sustainable Finance Action Council. And so fast forward to May of 2021, we did eventually establish this council. And our mandate is also reflective of a series of the recommendations that that expert panel had tabled in 2019 associated with disclosure, with better data requirements, with taxonomies that would serve the country and yet align with global ecosystems. And so our mandate actually is quite reflective of the work that was done by that expert panel back in 2018, 2019.
And you're just a couple months into the formation here. What progress have you made so far?
So we've established actually, two significant foundational governance structures as part of the Sustainable Finance Action Council. There is the council proper, which brings together 25 of the largest financial players in the country. We have the banking industry, the insurance industry, both life and property and casualty. and the pension industry represented in that group of 25. But we also have formalized a governance structure associated with the public institutions, the regulators, the securities commissions, to work alongside us, because we recognize that there is such an increased need and demand for cooperation and collaboration. If we are, in fact, to continue to make the progress that's desperately needed, we need to be working far more closely. We need to be aligned. We need to be supporting each other's mandates, the private industry with the public institutions that oversee our industries. And so there was recognition that these two governance structures needed to be formed. So we established them. We have them in play. We certainly have the sub-governance structures identified to focus on the three initial areas of focus for the council. And we have those sub-areas of focus resourced now and are finalizing the work plans associated with those three areas of our initial mandate. Those three areas being a mandatory disclosure regime for the country associated with the TCFD framework as a first area of focus. The second area of focus that we've resourced is looking at the transition taxonomy that this country needs, recognizing some of the unique challenges that Canada faces, and yet recognizing at the same time that we need to align, given our dependence on international markets and being a part of the international global system, that we align with that global ecosystem. So what taxonomies need to be in place, and what recognition of both transition challenges and opportunities for the country that allow us to remain within that broader international landscape. And then the final area of focus, and perhaps the most difficult one, I think, to appropriately define and ensure that we're adding value, is this question of data. To what extent do we need to shore up, enhance, strengthen, develop, new sources of understanding associated with climate data and the requirements not only of the private sector, but of our public institutions, our municipalities, our provinces, our territories, our federal government when implementing public policy. So those are the three areas of mandate. We've established those working committees. We're finalizing our work plans. We do have some initial work underway. We're now in an election for the country, so over the next few weeks, we have slowed our progress a little bit. But work is in earnest at this point.
You mentioned that climate data and analysis really are one of the fundamental challenges here. What areas within that do you think are most ripe for greater transparency or greater disclosure?
Well, I think, I'll start my comment by saying in an earlier life, I was providing leadership to the cooperators when it came to our data. And so I have, yes, albeit outdated, but I think an appreciation for avoiding the rabbit holes associated with data, because you can fall down those rabbit holes awfully quickly. So first and foremost, what we want to do as a council is really understand what is it we are trying to solve? What are the problems that we're trying to address when it comes to enhancing our data capacity as a country? Who are our audiences? What exists currently? What doesn't exist? Where are the significant deficiencies? And quite frankly, the work that's coming out of the other two areas of focus, the disclosure, the mandatory disclosure area of focus, and the taxonomy, particularly related to transition, is going to contribute significantly to a better understanding of where the data requirements are in this third area of focus. Now, having said that, we do know that there are substantial gaps that we all can identify currently. Very little level of sophistication associated with, measuring and monitoring scope 2 and 3 emissions as an example, or understanding when we turn our attention under the disclosure regime to what scenario building means and what it needs to reflect. And so there are some immediate, well-known areas of gap that the data team will turn its attention to. But we're going to be helped in that regard, and we will support. There will be, mutual supportive agendas in that regard, with a current pilot that's underway in the country with the Bank of Canada and with our federal regulator, OSFI, to drive, with the help of 6 of our members, drive a better understanding of what a fully robust TCFD framework will require vis-a-vis reporting and subsequently the data gaps that exist. So we're going to work closely alongside that pilot to ensure that as we develop out our recommendations associated with data gaps and where data needs to be addressed, that we're not falling down one of those rabbit holes that I mentioned earlier. So yet to be fully scoped and understood at this point.
You mentioned TCFD, and for any of our audience members who aren't familiar, it's the Task Force on Climate-Related Financial Disclosures. Why has the Council aligned to TCFD, and where are you seeing the uptake of TCFD in Canada?
Yeah, so, one of our early to-dos was to actually synthesize where country players were at and what the state of play currently was. And that effort resulted in basically an understanding that for the most part, we have embraced the need for a more robust disclosure regime. And so it's not whether we as a country embrace, it's how. What does that journey need to look like? And there's where I think the devil is in the details, because you have sophisticated players, both public issuers and non-issuers, who have been struggling with this and trying to get their heads around and incorporating additional reporting capabilities into their public reporting regimes related to TCFD. And they're learning as they go. Their level of sophistication is improving. They're figuring out where they need to do more work and where the heavier lifting is. But this is typically your larger, more sophisticated players who understand, many of them international in nature, who understand that this is a requirement, not only in this country, but globally. They need to be aligned. They need to get behind and committed to the ability to appropriately report. But we've got an awful lot of small players, too. I mean, 70% of our economy are small and medium enterprises who don't have that level of sophistication. So our challenge as a council is to acknowledge that, the whether we do that is basically behind us. We understand and we embrace and we support the need. It is to drive out that level of detail associated with what the journey from here to a mandatory regime is going to require. Do we phase it in with larger players going first and our smaller players and less sophisticated players across certain sectors, following suit? What level of reporting will be required? Where are the data gaps that we need to build out in anticipation of being able to ensure that there is true value add associated with the reporting, and it's not just a bureaucratic exercise that adds no value? So the devil is in the details associated with that TCFD commitment. But I will say that I am very pleased, and I won't say I'm surprised, but I'm pleased at the level of support to the commitment to move down this journey as a country, working hand in hand with our securities regulators across the country to figure out how best to ensure, that at the end of the day, we are in fact adding value.
And Kathy, knowing you've been in the shoes as president and CEO of a large organization and thinking about some of your peers in this space, do you think that they understand the value of these disclosures? Do they think it's something that's still a big use of time and resources, or are they seeing this as something that's critical to how they're planning the future of their businesses now?
Well, I think it depends on the sector that you're in and the level of sophistication that you bring within the sector. Clearly, the financial sector in the country increasingly understands that not only does it want to better understand and find not only the challenges associated with what climate is doing, but the opportunities associated with areas of investment and lending and insurance. And we're seeing that across the globe. I mean, there is no question that the financial system is embracing increasingly, particularly capital markets, the desire to better understand where not only the risks but the opportunities for investment lie. So if you're sitting in sectors highly dependent on attracting that capital, I think it behooves you as an organization to reflect that in your strategies and ensure that you are demonstrating a genuine commitment to better providing the nature, the level of information to those investors that is required. But it also holds true for private non-issuers, and an understanding that, there is opportunity. There is huge opportunity in the transition that we're on. And again, for anyone who is overseeing and responsible for strategy within organizations across all sectors, understanding where those opportunities lie is a critically important responsibility of senior leadership, not only at the board, but at the senior management table. So if these are not conversations, I think that it suggests that those organizations need to either get on board and understand how critically important it is, or they're going to be left behind, quite frankly. I think it's as simple as that.
We've been discussing primarily climate disclosures here, but the council has also been vocal that you will be prioritizing gender and diversity reporting as well. Have you found it more difficult to get that social disclosure versus environmental disclosures?
I think where the conversation has lent itself is to the issue of priority. And quite frankly, this urgency associated with better understanding our pathways to net zero 2050 and the sense that, we are running out of time and we do need to ratchet up the speed and the depth within which we're making progress. But I believe, and I think this belief is shared quite broadly across the organization membership of the council, is that long-term sustainable policy and decision-making and positioning, if it's not seen as taking into account a more integrated view of the social implications of the decisions that we make, whether they're the private decisions that we make or the public policy decisions we make, if they're not reflective of an inclusive and more diverse series of considerations, then the suggestion is they're not all that sustainable. I mean, if we're going to see in this country the kind of transition to renewables and to a broader, more diverse energy sector, and we choose to ignore social issues, whether they're Indigenous rights to governance or whether they're more broadly based in terms of diversity and inclusion, then I would suggest that we are not contemplating sustainable decision-making in the long term. So we recognize that as a council. The foundation that we put in place and that we recommend associated with this TCFD mandatory disclosure regime is foundationally based on that integrated view, ensuring that not only the E, but the S and the G are reflective, truly reflective in a genuine way in the frameworks that we recommend.
And given the Canadian focus of our event, I want to end on a Canadian note. So what do you think makes Canada unique in the sustainable finance space? What differentiates it from, say, the US or Europe?
Yeah, I'm not sure I would suggest that this is unique. Perhaps it's rare that, we're a country that is clearly, obviously, dependent on, an energy sector that is in transition. Particularly when you think of oil and gas in particular. And so our economic dependence on that sector is clear. And therefore, the challenges associated with how we best transition are very acute for the country. But at the same time, we are a country that is blessed with, mass, a physical mass, with, the educated population that we have, with the commodities and natural resources and the hydro resources that we bring to what we believe are going to be substantial opportunities as a country going forward. And we're so well positioned to be able to pick our spots and find those opportunities that are somewhat unique, perhaps rare, for a country to, on the one hand, be challenged significantly with an energy transition, but on the other hand, have substantial tools and capacity and know-how to ensure that we're leveraging that transition and finding the new opportunities and being able to capitalize on what this country can bring, not only to its own citizens, but to global citizenry as we all face the transition that's underway. So I would suggest it's not necessarily unique, but it's certainly rare for a country to be able to contemplate that the very challenges we face are also opportunities for us and areas where we can leverage the capacity that we bring as a country. I'll finish that by saying, you know, as you look at the oil and gas history in this country and the expertise and the infrastructure capacity and the know-how that exists in that sector, you know, we would be foolish as a country not to find the very best way to leverage all of that and to continue to use the success that we built up over the last 100 years when it comes to this sector, but in ways that make more sense for the future, and where energy is going to be attractive, where we're going to be able to maintain our levels of competitiveness as a country, but not forsaking all of that expertise and capacity that we built up, you know, over the many decades that we've been focused on the oil and gas industry. So I suggest we've got kind of a, you know, the double-edged sword here that allows us to, I think, look forward to a very exciting future as a country.
An exciting future is a good place to leave this. So thank you again, Kathy Barswick, Chairperson for Sustainable Finance Action Council of Canada. Thanks for joining us, Kathy.
You're very welcome. Thank you.
Our thanks to Kathy Barswick for a terrific interview. Thank you for your insight today. And thank all of you for joining us for this 9th annual Bloomberg Canadian Fixed Income Conference. We do hope you enjoyed the day and all of the conversations. Thanks to all of our speakers and moderators for this terrific program. And a huge thank you to our sponsor, National Bank of Canada. And of course, most of all, always thank you, the audience, for being with us today. A reminder that you can watch any part of the conference on the website at any time. The recordings are live on the agenda section, and you can see them there. For more financial and business news from Bloomberg's Global Newsroom, you can always visit Bloomberg.com. And remember, you can follow us on Twitter @business. Thank you all for watching.